First, I'd like to thank you all for inviting me, especially to V for the opportunity to address you. I suppose I should also apologize for speaking in English. I did live in Mexico in 1982 and learned Spanish and have used Spanish quite a bit in my career, but in the past few years I've fallen out of practice, and I wouldn't want to make it too difficult for you to understand me. I think you trying to understand me in Spanish might be more difficult than trying to understand me in English. But again, thank you very much for showing up here. It's great to be back in Mexico. I've only been back a few times since I lived here. It's really interesting having been in Mexico in 1982 when the crisis that started off, in my mind, the emerging markets actually happened, has really given me an opportunity to see how a country can react to a crisis, but also coming back here to see how much Mexico has changed and reacted and developed since the 1982 crisis and the subsequent 1994 crisis. In many ways, having lived here in 1982 set the platform for my job. I lived here, went to school, university in the US, and the job that I ended up doing dealt with country debt restructuring. It was, in the finance world, the one thing that I was most interested in because I'd lived it. Before Mexico, I'd lived in Africa. I spent a lot of time in Europe as well, and just having a job in finance that had to do with, in effect, development economics was more interesting than just being a relationship manager with financial institutions. From my first job, I ended up working on the restructurings of Yugoslavia, the Philippines, and subsequent to that, since I found out that actually the nitty-gritty of sovereign restructurings was not that much of a developed skill by most people, I ended up getting involved in the restructurings in Russia, in Argentina, in Ecuador, in Greece, and it gave me a real sense of the kind of crises that drive emerging markets, that on one hand create opportunities for investment, on the other hand create quite a bit of risk for people who are investing. And from that perspective, I would say coming back to Mexico, yesterday morning I came into the hotel, opened up the newspaper, and saw the report of the results of Pemex, which were dramatic enough to give a sense of a possible crisis. And speaking to people yesterday afternoon, I would say there's a sense that there's a pressure here. There are issues around the devaluation of the currency, structural issues. We've heard this morning about corruption. And there's concern of how Mexico is doing economically, financially, on the back of what was a very hard year in 2015. I think I'd say, having been in the midst of a number of crises, and I suppose the reason I'm here is to give you a sense of the perspective towards Mexico in the international community, in the New York investment community, is the concerns that people have here on the ground about Mexico and where it stands are valid concerns. But compared to the problems that other emerging markets are facing and the kinds of crises that Mexico's had in the past, Mexico is actually relatively well situated to benefit from investor capital going forward this year. So having said that, I would take a couple steps back. I mentioned last year was a very difficult year for emerging markets. We had a number of headwinds in the markets. We had what I thought was a very overblown concern about the Fed in the United States. There was so much of a dialogue of, are they going to hike 25 basis points? And it ended up occupying a lot of media attention, a lot of investor attention for really just a small move. But it is significant in that the United States is looking to tighten on the back of the rest of the world leaving conditions, having easy monetary policy. What that did, in effect, was create a strong dollar environment, which was one part of the issues that were confronting emerging markets. You had the strong dollar environment, tightening environment in the United States. That, in addition to the pressure on commodities, if you look at the commodity charts from the end of, basically the middle of 2014 on, real pressures which would clearly have an impact on any commodity exporting country. So the issue of the United States, Fed policy, commodities, and then more recently, issues in China and concerns about growth, which obviously tie in with the commodity story. Then, something that I've been involved in the whole time, the whole issue of Greece, the rest of Europe. So there was a sense last year of emerging markets being a place that people need to be careful of, that there was a very big risk of an event. No question about it, many countries are having issues. Brazil's got fundamental political issues. Commodity exporting countries have real issues. You've seen the impact on general uncertainty in financial markets create, in effect, a risk-off environment that's impacted any emerging markets investing more than some of the central markets. It really came to a head in December and January of last year. December of last year and January of this year. And in our markets, you had large international bond issues moving down 5 or 10 points with very little volume. You had commodity prices falling out of bed. And I think the impact on the psychology globally was pretty dramatic. Most of the sell-side research we were reading was talking about real fundamental issues going forward, real structural problems. China becoming a serious crisis. We were almost going beyond hard landing. They were talking about a potential debt crisis in the banking system there. And I guess where I come from, having seen crisis after crisis, having lived in Mexico in 1982, dealt with issues like Argentina, like Greece, where it felt like all of the Eurogroup was teetering, the whole Eurozone was teetering on the brink of collapse. The sentiment that we were reading about, I thought was far overblown based on what the fundamentals were. What we hit in December and January was a period of market volatility that was driven by technicals that overflowed into an idea of fundamental analysis. But what I have been saying to our clients is, don't take the signaling that the markets have been giving you as something that is real. What's going on in the markets has a lot to do with technicals, inflows and outflows, but the fact that prices are moving the way they are doesn't mean things are that bad. All it means is, you could say, asset prices are dislocated from fundamentals, or more simply, some people are panicking and you just have to let it clear. Of course, this analysis of the market, don't panic, things will probably be okay, would probably have resonated a lot more 3 weeks ago than now. I mean, you've seen in the past week, oil markets gap up, high yield markets in the United States gap up, a very strong bid for a lot of emerging market debt. So I think you're already seeing the underpinnings of what a potential turnaround is. Specifically with Mexico, I mentioned the Pemex earnings and the reaction, and I think that there's certainly a lot of investor concern on some of the problems with Mexico. But if you put it in the context of the concerns on other regions, like Brazil, like Venezuela, there's an understanding that there are issues in Mexico, but the framework that Mexico is building is enough to sustain long-term development. Taking a couple steps back, what are the big issues that you see with Mexico? And again, I'm a little frightened to have an opinion on Mexico with this crowd because I'll come across as relatively naive. From my uneducated point of view, the issues with Mexico are, a long period of low productivity that's impacted GDP growth. What are the underpinnings of this? There's, the issues of corruption, informal activity, some lack of structural, reform, long-term issues in education. But fundamentally, you're looking at a situation that does come back to this issue of institutional reform, building the infrastructure of, of a society, of an economy. And if you look at things between strong countries, strong economic countries have strong structural foundations. They have strong systems of law, they have strong economies, they have strong education systems. Weak countries don't have a strong structure underneath them. In many ways, Mexico may not be the highlight of the emerging markets in terms of implementation of reforms. You could certainly make an argument that Asian countries have made better developments. But if you look at the performance of Mexico vis-a-vis the rest of Latin America last year, it actually, in the context of a bad market, the foreign exchange moves that spooked you, the widening of yields, whether in UMS or in Pemex, was much less than what you saw in other Latin American countries. And taking a couple of steps back, many of the issues that Mexico is facing relative to some of the reform issues in the rest of Latin America are there, but there is a clear indication that there is a willingness on behalf of the population, on behalf of the government, to undertake the reforms. You go through periods around elections where they sort of back off of pushing some of the reforms, but every discussion I've had here they've addressed the issues. In many of the other countries in Latin America, you don't get the focus right on it, or the problems are so much more extreme that they're not working on building the institutions. So there's a perception in the markets that's translated into the bad performance last year not being nearly as bad as many of the other Latin American countries. You can see that there's a baseline confidence and a perspective towards Mexico that's an investment opportunity. So what I'm hearing on the back of what went on in Pemex was a real sense of confidence that if they do a call with investors and an undersecretary of finance gets on the phone in the call, that's an indication there's a recognition there's a problem, a commitment to address it, and there's a confidence that there will be a well thought out plan. I mean, there's room for disappointment, but what we're seeing in our world is people are seeing Mexico, Pemex, some of the lower tier institutions as investment opportunities. And I think that really has to do with the way the interaction that the government has had, the kind of dialogue that you see internally, and the commitment to reforms. It's certainly not an easy, path. You need to see, much further reforms in the legal systems. Long term, I think, if you look at Mexico relative to the rest of Latin America in terms of educational standards, there's room. They're sort of middle of the pack in Latin America, well behind, the Asian countries. So there's room for a lot of improvement there, and that's what can set the baseline. But net, Mexico has real problems. I think that the view internally of the problems they have is probably a little more pessimistic than the view that we have in New York, partly because you're living it, partly because you're also looking at the market reactions that we see, and you start reading fundamentals. But the context I'll give you is, foreign exchange movements. It's rational. It's happening in every other emerging market. Dollar's strong, local currencies are weak. You can't expect the peso to stay strong if every other currency is weakening against the dollar. Pressures on Pemex. Well, no question about it. Hasn't been a well-managed company historically, but let's see what happens. Let's see how they address the issues, pension fund liabilities. More fundamentally, you've seen free fall in oil prices. Let's see where it recovers to. So looking forward in the general markets, we're starting to see people understand that the China story is not a disaster. I was in the G20 in Shanghai last week. The Chinese went out of their way to talk about keeping their economy on track. They made specific reference to commodity demand. So let's not be too pessimistic about China. If you start seeing stability in the markets, you're going to see more appetite for risk across the board. And I think you're going to see, especially with some of the long-term investors, more appetite for some of the opportunities you see in Mexico. So again, not like they're not risks out there. There are plenty of risks. You've got Europe still. You do have China. You have the unintended consequences. But by and large, certainly compared to what we were seeing the second, third week of February, the risks aren't as bad as the market would suggest. The perception of Mexico is much more positive than you might see here. Mexico's making the right steps. The dialogue's the correct kind of dialogue. It understands the reforms it needs to make to be a, really within the context of Latin America, there's no question that Mexico is seen as more committed to reform, having made more progress on reform than other Latin American countries. So the opportunity's there, and my forecast is by third quarter of this year, I think you'll see the situation across the board in emerging markets and in Mexico stabilize.
Here I am. Bueno, evidentemente agradecerle a Hans Humes y preguntar, como hizo ya él, si tienen preguntas. Yo tengo una pregunta y tiene que ver con Estados Unidos. ¿Qué tan preocupado está usted del fenómeno Trump? ¿Le preocupa? Porque hoy en la mañana, everyone was worried. Larry Summers today, Washington Post, long piece, The Dangers of Trump.
No question about it. I mean, it's interesting. If you want to take a look at my post last night on Facebook, I said I feel very uncomfortable being with some of my Mexican colleagues because they couldn't quite rightfully ask me, Trump, WTF. I don't know if that translates into Spanish. And
¿Qué onda? We would say, sort of.
I would say the best thing that I've heard about Trump was said by Vicente Fox. And I'm not sure he used enough swear words. Listen, the U.S. has a proportion of the population that is ignorant, racist, stupid, and quite liable to blame their problems on other people. So if you've got people who've disenfranchised themselves economically, it's difficult for them to recognize that it's actually maybe not the Mexicans' fault. Maybe they should just adjust to the new economy. But you have that proportion in every population. So the one thing I put to mind, if you look at registered Republicans versus registered Democrats, registered Republicans are 45% or less of the population. Trump is coming in, winning anywhere from sort of 25 to 40%. So you're looking at and that's the turnout. So you're looking at a pretty small proportion of the population, of the American population, that's stupid. But every country has a proportion of the population that's stupid. Don't worry, there's no question that if he gets a nomination, Hillary Clinton will beat him, because she's going to have half the Republican Party working with her. So I'm terribly embarrassed, although must say I'm really amused watching him. But it's certainly for the United States, it's a very good reminder. One thing, if you start feeling a little insecure about Mexico or emerging market countries, just look at the fact the United States can put Donald Trump up as a candidate. And, you know.
So, let me just add one thing. So there's no scenario in which Trump could win the presidency. Let me just suggest one. A recession. The economy takes a turn for the worse, and these disenfranchised people feel even more so. There's no scenario?
Oh, well, of course there's a scenario. I mean, listen, I work in emerging markets. You know, we spend all our time trying to figure out how bad things can get, so we can be pleasantly surprised when they don't. I mean, you know, you can have Hillary get the nomination, and for some reason, you know, there's a indictment. The one thing I'd say on that is the good news on all the issues that are facing Hillary is they're, you know, if you look at how they've transpired, they're politically motivated. So you've got groups in the government that are pushing this agenda to weaken her going into the election. Trump gets a nomination, her issues will disappear. Mm-hmm. So her being disqualified, indicted, a recession, it won't do it. I mean, first of all, I think the likelihood of a US recession is not high. If you look at some of the employment numbers, you know, wage numbers, everything's going in the right direction. The recession's not going to come from the United States. It'll be an exogenous shock. So I'm not worried about that. Listen, yes, Trump could win the US election. I wonder, could I move back to Mexico if he does? Is it okay? But I think it's unlikely. I would hope that we're at the sort of the peak fear period. I mean, you know, I don't want to get into too many particulars. I come from a very political family. But if you take a look at the margin in states like Virginia, the fact you got winner take all, you know, he could lose it. You go to a brokered convention. The biggest damage you'll see coming out of this, regardless, is to the Republican Party, which I don't really care about. So.
¿Alguna otra pregunta sobre Estados Unidos, mercados emergentes? Allá al fondo tenemos una pregunta. Adelante.
Yes, hello. In this integrated world financial markets, how do you foresee the very divergent monetary policies balancing out on the long term? They're very divergent at this moment.
Right, and you're touching upon something that's created a lot of the stresses that we had last year. Because generally, either, you know, the world's easing, the world's tightening. You know, this is, you know, and one of the issues is usually you get a market relief rally when the U.S. tightens, but it's a confused signaling. What I would say is the market has been a little too paranoid about the U.S. tightening. I don't think we need to be too concerned that they will tighten too much. You know, if we get one more tightening this year, you know, 50 basis points, who cares? I mean, the amount of noise around 25, 50 basis points, if it's 100 basis points, we've got something. You've already seen the currency move. So I would say the biggest thing I would, you know, point out to people is the U.S. is tightening on the margin, but the rest of the world is still pumping liquidity out there, which sooner or later is going to create the underpinnings for a risk-on trade, which is one of the reasons I'm not as concerned about markets as people were in December and January. There's still liquidity out there. There's going to be much more liquidity in Japan. There's more in Europe. The balancing between the U.S., Japan and Europe, you're already sort of seeing it, sort of a fair relative value. But the real thing is there's still a ton of liquidity in the global system that's not going anywhere very soon. So you might have a long-term period of slow global growth, but in terms of looking for returns on investment, we're going to see that going forward. So you're going to, the pressure that was on the high yield market, on equity markets, I mean, I'll focus more on high yield and on emerging markets. I think that's going to ease off. Commodities won't be as bombed out. You're going to see much more stability and actually more of a risk-on environment through the balance of this year, I think.
Bueno, con eso llegamos entonces al final de la presentación del señor Hans Humes. Soy el encargado también de entregarle un hermoso cuadro. I hope you have a suitcase or something, because this is serious business. Thank you for joining us. Thank you for joining us.